In this video, guys, I'm going to talk about avoiding these common spread betting traps for beginners. Stay tuned. Hey traders, a warm welcome to youre. So you're new to trading, you're new to spread betting, you've just opened your account and you want to avoid the biggest traps. So I've got 5 super common traps that new traders make. I know I made these when I started spread betting all those years ago, back in 2001. I know that many new traders make this as well. So if you can avoid these, or the majority of these, you've got at least a good chance of getting past your first couple of weeks, your first couple of months, your first couple of years of spread betting alive without blowing up an account. So without further ado, let's hit it. All right, first one is trap number 1. Trading too big. I see this constantly, guys, and it's because, and what I mean by trading too big, by the way, is your position size is too big at the beginning. You're trading far too much, and so your account balance is swinging a lot, and so you're emotionally attached to the monetary value of the trade and the bet as opposed to the process of trading. Listen, we all want to make money. That's the point in spread betting. That's why you're here. That's why you're opening a spread betting account. But resist the urge to trade too big at the beginning. It's super tempting. You start to think, look at all the money I can make. You start to want to trade and you want to put big position sizes on, but it will not serve you in the long term. What will happen is you'll make some money, you'll think you're good, then you'll lose it all, then you'll lose more of your account balance and you'll feel awful and you won't have learned anything other than having the pain and of emotional swings of going from a real high point to a low point. So trade small. That is the one thing that will help you move forward, and you can increase the size later on. Number 2, trading too many markets or positions. I see this very commonly as well, guys. You try to trade too many things. Someone's got trading crude oil, they're trading some UK shares, they're trading some US stocks, they're trading some commodities, they're trading some indices, they're trading some forex pairs. They've got all these things, they've got all these multiple positions on, they're watching this, they're watching that, they've got short here, long here, blah blah. You can't do that. You can't manage that number of positions, especially with spread betting, which is more of a shorter term trader's vehicle. It's not a portfolio you're building for investment. That's a separate thing altogether. Nothing to do with spread betting. Spread betting is not really a vehicle for longer term stuff. So it's more of a shorter term vehicle. So you can't actively manage, professionally manage, and keep an eye on all these positions, all these markets. So bring it right down, become a specialist. Become a specialist in whatever you need to be or whatever suits you, but become a specialist. All right, so number 3, guys, trap number 3 to avoid: over trading. That's the frequency of trading. Many traders make the mistake of trading, constantly trading, and you're not trading when you have an opportunity. You're trading just because you want to trade. You're trading for the enjoyment of trading. There's nothing wrong with that, but if you do that, then that is probably going to result in you draining your account quicker, because you're not trading when you have an opportunity. You're trading just because you fancy trading, and then you're done in some sort of gambling mentality. So don't overtrade. Pick your spots and your trades very carefully. Hit subscribe and have a look around the channel and look at the videos that we've got on here to kind of give you an idea, maybe some strategies and stuff like that, and how to approach risk, etc. But keeping it broad for now, overtrading is a bad thing. You want to pick your spots very carefully and trade like a sniper. Wait for opportunities and trade. Okay, next one, guys, number 4. Not understanding your market. What do I mean by this? So listen, you have to understand the nuances of real intricacies, but just understanding what moves your market broadly. I see so many traders fall into the trap of they've got a share position, the next day it's gapped down 15%, and they're like, what's happened? Well, it had earnings out. You know, earnings are released by the company into the market after the market's closed, and that's affected the price the next day. Or they've got a forex pair position, a currency exchange rate position on, and then it suddenly moves 200 pips and it's been moving 20, and they're like, well, why has that happened? Well, there's economic data that comes out. It's an interest rate announcement, or some kind of jobs data, or something that affects that currency in the economy. So just understanding, or another one quickly would be crude oil inventories if you're trading crude oil. So just understanding what moves your instrument, because there's announcements out there that move your instrument dramatically very quickly. So before you place your trade, do a little bit of research and say, you know, what moves this? What was on the economic calendar? When are the earnings dates are? Just understanding what can move the market you're trading. Because very often traders just go, oh, I didn't realize that was going to happen. Oh, I didn't know that would affect that. So it's just a little bit of research, taking a little bit of time, a little bit more care. Final one, guys, trap number 5, thinking you're a genius after a few winners. Very, very common. You make a few trades, you think you're great, you start to think of what you can buy with this and how much you're going to make over the next year, and you tend to just go in, and all of a sudden you give all that back and probably more and back and start eroding away your account. And it's brutal for your emotional stability and swinging in terms of trading, because you're starting to look at that money and going, this is great. And if you haven't been trading before, you haven't been spread betting before, you're kind of looking at that in terms of maybe your job or how much money your income is, and you're thinking, wow, look at this money, if I can do this every day or every week, it's going to be great. And you end up falling into the trap that a lot of traders do of thinking that's going to continue, and in reality it's just a couple of lucky trades. You end up losing, then your emotions take hold, you end up taking decisions from an emotional perspective rather than a logical, planned perspective, and it all goes to pot. So guys, those are 5 common, very, very common spread betting traps. If you can avoid all of them, you've got a great chance. You can avoid most of them, that's good. If you end up falling into a lot of these, you'll be in trouble. So take care, keep your risk manager, whatever you do. And by the way, check out a link in the description below for a broker if you haven't got one yet. Demo account, check it out, go and have a look around, see if it's right for you. Take care, see you next one. Subscribe if you want to see more from me and other guys on the channel, talk about trading strategies, plans, risk, etc. Bye-bye.